Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday the 29th of October. Starting off with the FTSE 100, which did what we didn't want it to do, but was within the charting remit. We had a consolidation just near old support, 73.70, and we pushed lower. There was always the risk of a move down to the floor of that falling trend channel from February, 71.50, and that's probably where we're going to go while we're below that 73.70 area. The 50-day line flat, but the 200-day falling, which is not a great sign, and that is probably going to provide the momentum for a further move towards 71.50. The RSI 33, so there's still a little scope to get down into the oversold area. The last rally came from, or the last rallies came from sub 30 RSI, so we may be a day or two at least away from that kind of scenario. Moving on to the DAX, which, if anything, looks even worse than the FTSE at the moment. Here we've gapped down last week and closed near the lows this week. Support line projection there from back in March around 14,400, and that's also the March support for this market. So that looks as though that will be the place for this market to go. Worst case scenario is that there's another leg down back to December support at 13,800, but at this stage, just going for that 14,600 area, while we're below 14,800 and the broken floor of that falling trend channel from May. Moving along to the Dow. Here it's an equally unpretty picture with the break of that uptrend line there from back in October. That was 33,000. Below that, there's the risk of not only a test of March support there, 31,400, but also a move down to the floor of that broadening triangle from November last year at 30,500. We've got the 50 and 200-day moving averages both falling. The next time they cross, which could be in the next week or so, would be a dead cross. So the run-up to that, obviously not a very happy picture for the bulls. The best market by quite some margin is Bitcoin. You can see that we've had the big gap up that we had last week and holding well at the higher levels. In fact, holding above 32,100 support very well indeed. Normally, old resistance becomes new support for a market, but here we're managing to hold well above it. There may be one or two little probes down towards 32,100, but overall the pattern here, the expectation is that we would head up to the resistance line projection there from last October, as high as 43,000 and perhaps as soon as the end of November. The other point to note is that we're about a day or two away from a golden cross between the 50 and 200-day moving averages, so a very blessed signal there on Bitcoin at the moment. Moving on to the stocks, and quite a few actually, after the rather quiet price action and activity that we had early for Friday. See Armadale Capital break through its 50-day moving average properly for the first time since back in February. That line there at 0.76, above that we're looking for as high as 1.1 pence by the end of next month at the top of that broadening triangle from back in July. The rebound back by bullish divergence there as well. And as long as we are on the right side of 0.7, looking for that push towards 1 pence or more. Covered Challenger at the end of last week and seems to be poised to break that line of resistance there from April. That's around 0.07. Above that, we're looking for 0.1 by the end of next month. And ideally, we stay above the 50-day moving average, 0.06, and hold that unfilled gap to the upside that we had back on Friday. The up move, backed by bullish divergence on the RSI window, or in the RSI window, where we went lower for the start of October, but the RSI pushed higher. Stock that looks like it's finally going to make its next move to the upside is Corcel. Here we had, I suppose, a triangle formation there, but we broke down just below it, taking out, I suppose, weak hands below 0.39, but we bounced back very sharply on Friday and have broken that line of resistance there from last month at 0.45, above 0.45 on an end-of-day close basis, looking not only for 0.5, but even up to a resistance line projection there from the end of last year as high as 0.58 by the end of next month. Shat Gold is next, and maybe the funding news. I think the extension of a loan that the company's got has improved the share price there quite markedly on Friday. We've broken out of a falling wedge there around the 3.6 pence level, above 3.6, looking for the shares to head back to the old August support area at 6 pence by the end of next month. There is the barrier of the 50-day line there at 4.8, but with the bullish divergence we've got, combined with that positive news at the end of last week, it looks as though Chaarat is finally going to have a little bit of a positive run after quite a long bear move on the stock. Echo is next, one of Friday's rare rises, and here you can see that we're making another attempt to bounce off the extended lows that we've had here. The current picture is that we bounced, just had a higher low there for the end of October above 0.13 rather, and looking for the shares to maybe go up towards the 50-day moving average, initially 0.23 over the next couple of weeks. Best case is up to 0.26 rather, by the end of next month. An old favourite is back now with Eurasia, and here we had that temporary move below the 2 pence level, the low there around 1.95, and we bounced back quite well after that, so it looks as though that was a bit of a bear trap. The main resistance line there is from April, around 3 pence, but we could even break that and head up to 3.6 or 3.7 pence by the end of next month, finally having a breakout while we're above the 2.5 pence area, which was support late last week for the shares. On to ECR Minerals, which looks like it's delivering on the look that 0.2 pence is the low for the shares. Got a rising trend channel base in place since the end of August. That line there at 0.21 at the moment, and while we can stay above that area, we break that line of resistance there from back in July at 0.27. That's the initial target, and then head up to 0.4 pence, perhaps as soon as the end of next month. On to Hydrogen Utopia, which has been making positive noises. Here it also looks like a bit of a bear trap situation. The old low there back in August, 3.8 pence. And above that, we're looking for the resistance line from June around 5 pence. And then perhaps as a best case scenario target, a move towards 8 pence by the end of next month. But the key here is holding above 3.8 pence, backed by the bullish divergence line there from June. So the lower lows in the last week, but higher RSI trace, giving confidence that the shares will push up finally. Kodal's next, and here another stock with positive funding news. We hit the top of that falling trend channel from June. That's 0.65. 0.65 the level to break on an end-of-day close basis to give the shares the chance of heading up to the top of that rising trend channel from last year, as high as 0.95 by the end of this year, or perhaps even sooner than that. Don't really want to see the shares back below the 200-day line at 0.54 in the interim. Moving along to Phoenix, where we've had the shares rebound quite nicely. That was called here a couple of weeks ago with a bullish divergence. Now we're seeing the shares remain at and above the March floor there at 18 pence. The longer they do that, the greater the chance of a move towards 26 pence and the 200-day moving average, and then perhaps as high as 34 pence by the end of next month. Ideally, the stock breaks that 200-day line over the next week or two. Petro also looking interesting at the moment. The reason for saying that is the trend line break from July. That's not everything, but it helps, and also hinted bullish divergence with the last lows that the shares made. But the view here is that above recent support around 2.75 pence, we should at least head up to the 200-day line at 4 pence as soon as the end of next month. Big picture target obviously heading back to the top of the range, but a bit early for that at the moment. Red Rock pulled the rug earlier in the week, or in fact on Friday, with that probe below 0.1. We were hoping that that would not be broken, but it actually was, and then the shares actually pushed straight back up again. Initial target here, 0.19, and then best case scenario up to 0.32 by the end of next month. And perhaps that bear trap will actually give the shares better momentum on the upside than they had earlier this month. Another recovery play is Symphony Environmental. Here we've gone from oversold territory, very oversold territory in the single-digit RSI area, and a bit of a bounce there. Initial target here up towards 6 pence or maybe 6.25 pence by the end of next month. Ideally, we stay on the right side of 4 pence. Don't think I've looked at SDI for a long time, if ever, but here we've got a trend line break from June. That's at 93 pence. And also we've got an RSI support line backing the current recovery above the 93 pence area, looking for as high as £1.15 by the end of next month. On to the last two, and the first one a rather controversial situation at the moment. Obviously news after the market close, which leaves everybody trying to work out what's going to happen tomorrow. Probably the favourite bet here is that we would head back to the old resistance around 3 pence. That would probably be the best case scenario, and then hopefully bounce from there. There's an uptrend line there from back in July around 2 3/4 pence. So that's another candidate. Worst case, I suppose, is if we just go back to around the 1.75, 2 pence area and then bear trap people from below the September support. But I suppose the point to remember here is that the market never really believed the deal. So ideally, the downside now will not be as great as maybe some are thinking. On to the last situation, which is XP Power. Here, a simple neckline break after the overshoot to the downside below 8 pence. Above that neckline at 10.6 pence, we're looking for the shares to head back to the bottom of the gap down from the beginning of the month at 16 pence over the next 2 to 4 weeks. That's it from me today. More updates tomorrow.